Hey, good evening, guys and girls. Um, going to do a little bit of webinar here. Go over some trades that worked, some that didn't work, and the reasonings behind why they didn't work, as in my opinion. And then I'm going to touch on some trading psychology. Um, I know I said last time that we're not going to go over any more charts and setups, which we're really not. I think we're past that. Most of the room is past that. But what I am going to do is still go over the trades that I've taken during the week. So you can kind of hopefully start to see what I'm seeing in the charts. It's going to be very important that we all look for the same things, regardless of the stocks. Even though I still recommend, playing the stocks that I'm playing, um, everyone has their own stocks that they like, and that's fine. The good thing about my method is it works with the majority of the stocks that are out there when the stock is in play. Like today, Netflix, I pulled it up and it was just so choppy. There's just no way the stock was in play today. But I'm sure Will did, pretty well playing Netflix because he knows that stock pretty well. I don't like playing stocks that are not in play, and I can tell by looking at the chart if a stock's in play or not in play, just by the way it's trading. There's a lot of wicks, um, a lot of unexpected movements. That's not a fluid. The stock's not in play. Move on. Find a stock that's in play. Put the odds back in your favor. So we're going to start off with this ENS. The stock, I think this is from yesterday, came out and confirmed that they were in talks to be bought out or to merge or whatever with another company. Beautiful spike up. Hit the 67s. Beautiful, beautiful short all the way down. I mean, if you had this short, as soon as this thing started turning red, you risk a point to 68 and just ride this all the way down. I missed this entire move. I was probably stuck in another trade, but this was a beautiful, beautiful short to take. Okay, these parabolic spikes are awesome, especially if you go to the daily and the weekly. You'll see where the support and resistance are, and you play them accordingly. So this faded all the way down and held at 20, and then you start seeing it starts making higher lows, higher lows, higher lows, moving average cross. Okay, so it was getting close to the close, and usually in a situation like this, when it has one run up, it'll make another run up, especially if it's confirmed. This one started. Just type this. This one started. One second, please. Okay, this one started. It looked like to me it was getting ready to run because I was waiting for the second leg up. So I went long right here. Broke VWAP, nice solid little, even though it was a small elephant bar. Went long. Came against me, but still held VWAP. And then it reclaimed with this green candle. So I knew I was good. What I should have done was added, okay? And then here, I knew I was great and sitting pretty because you got the moving average starting to curl up. This rising 50 is a nice sign. So I knew going into the close I was going to be good on this one. And it ended up working out well. So I went long a little bit early, a little bit premature. I should have added when this 20 period got reclaimed and it stuck on VWAP. So took it up. I think I got a nice point out of it, point and a quarter or something. And of course I left some on the table. But I was happy with the trade. It worked out well. It was a nice trade. The second one is Tesla. This was a trade, again, that I think I took yesterday that I had no reason to get out of, with the exception of I thought the trade was done. So you can see, came out, tested VWAP, failed, held the 50, starts putting in higher lows, starts riding the 9 and the 20. Okay, Tesla's one of those stocks where it moves points at a time. So I didn't have a lot of size, but I had some size. So I went long here, okay, over VWAP, okay, because it kind of broke out. You can see this trend line resistance and the VWAP. It broke out, so I went long. Came down, tested 200, it held. Okay, I should have added. Okay, so again, I'm pointing out things that I could have done better. And when I do my chart reviews, this is exactly what I'm going to do. When this came down and held the 200, you got the 200 here, you got the VWAP, and you got the 20. I should have added to my position. Okay, so it came back up nicely, came back down again. Okay, and here, what I do, I sold it. Okay, pretty much scratched out. Okay, I looked over here. I said, okay, this area is getting a little toppy. It can't break this level. So instead of selling here when it was holding the 20, I should have added again because it never broke the 20, which is my rule. You know, if that's what I'm basing my entry on, that's what I'm basing my exit on. So instead of kicking out, I should have added. Okay, so I should have added twice to this trade. It would have gave me really decent size, but it never gave me a reason to get out. And then look what happened. Beautiful, beautiful. It went 240 to 242. And then up here you can see it's starting to get a little toppy. So I would have sold as soon as this is breached. So I left about 2 points on the table. So again, great trade. Okay. Poor non-ad. Poor exit. I should have added here. And let's try this way. Great entry. I should have added here. Instead of kicking out here, I should have added again and wait for this move all the way up. It never broke the 9. So again, great trade in theory, just mismanaged on my end. And I think it's important that I share with you my trades that aren't executed properly, just as well as the trades that I execute properly, because there's a lesson for everybody in every trade, and we're always looking to get better. ILMN, this was along right here, this area, okay? Hindsight, it's so easy to see in hindsight. You got the moving average cross, bullish engulfing bar. I mean, it's just everything was there. So came down, tested 200 and failed. I waited until it tested the 50. I'm sorry, tested the 9, which the 9 held. Okay, so it came up and it tested to 200 again. I anticipated it because this is a strong stock now. Okay, it held the 9 here. I anticipated breaking this 200 period moving average. So I went long. A little bit early, but I was fine with the risk. Totally fine with the risk. Because I had the 9 right there. What's my risk? 25 cents. So went long, nice size, nice little pop. I got about a point there. And then I sold the rest here, probably for like another 83 cents. And then the thing goes up another another 2 points. But that's okay. It was a nice trade. I had the momentum with me. And as soon as I anticipated the breach over the 200, I saw the strength. I went long, and then I sold into the strength. I just should have kept a little more. My last size, I should just held on to. Instead of doing, halves and halves, I should have done thirds and thirds or quarters and quarters. But it was a nice move, and I was happy with that trade. This one is on AGN. This you can tell when the stock is in play, okay? It was holding this beautiful trend line all day. Okay, it was resistance, now it becomes support. Okay, you really could have scalped this all day long. Okay, and I got to remember to talk about scalping as well during this webinar. So I was waiting for this trend line to break. Okay, and as soon as it broke right here, I nailed it. I just nailed this short, and I almost bottom ticket for a really sweet cover. Great, great trade, all based on a trend line breakdown. That's all this is based on. That's how simple the trading should be. When we make trading more complicated than this, we are not trading the way we're supposed to be trading. Okay, trading by nature is simple. It's the execution that's the hard part. So trend line break, short, cover. I got, let's call this, I don't know, let's call it, is it 285? 283, about 2 points. It was just fantastic trade. This is Win. I put this up for a new member. She wanted to know about Win and LBS, and if I would have added to the trade, where I would have added to the trade. So both of these stocks are very strong today. My first add would have been right here. Okay. Stock's kind of topping out, and then as soon as it starts getting over this high, I would have added. Okay. Riding, again, you could add it here, kind of consolidates, and then it pops up. You're still riding the 9. Pops up, you could have added there. I mean, there's so many different points you could have added. But on the pullbacks, that's where you add. When the stock consolidates and holds a 9 on a pullback, that's where you add. And here, would have got stopped out. So your adds would have been here, here, and here. Just a beautiful, beautiful chart, beautiful trade, riding that 9 moving average all the way up. This is the stocks that we look for. This is a trade in DWTI. Ended up working out rather nicely. I took this with a risk off of 90, kind of a double top here, so I went short and gave it some time. Never really went against me, and then just got a nice little snap that I covered here. About 1.5 points out of it. Well, let's see. 89.50, covered at 88, or I don't know, 87.90, something like that. About 1.5 points. So when short, even though I held a 9 here, my risk was 90, okay, which was the prior high. It never came close to that. So that was my risk going in. I took the fade, rode it, and then I covered. I actually covered half, hoping for another snap. Went against me a little bit, so I covered the other half, and then of course it continued to fade. But I was very happy with this trade. Very happy. A nice double top with a lower high, anticipating the downward trend. Okay. AGN again. This was another day when the stock was in play. I brought this up for 2 reasons. One right here would have been a nice short opportunity. Okay, you can see it was coming up. It rejected the previous day close, and then it started to fade. So as soon as it rejected on this candle and then put in this lower candle, I would have went short. Okay, even though the 50s right there, 9 and 20s right there, it was a weak market. It rejected it there. My stop probably would have been a point 267, 268 if it went up to the previous day close, which it probably would have rejected if it went up there anyway, so I probably would have added. And then it just faded all the way down. Okay. And then what I liked about this, it came back up and then it consolidated. And when it does this, you always anticipate this second leg down. So as soon as you see this candle take out this low, that's just sign to go short. Okay? And I pulled up the 5-minute as well, because I called it here. I'm like, this is looking really heavy, really heavy. As soon as it snaps at the 200, you guys take this thing short. And it was 279, I think, and change. And then just a beautiful snap down to 274. So this was called in the room. This was called in the room. This wasn't, but I want to start bringing these to your attention. As you can see how important the previous day closes are. They act as natural support and resistance. So you need to be shorting into these on days that the markets are weak and the stocks are trying to go from red to green. Okay? And these VWAP buys all day long. You see how every time it came down, tested VWAP, you get a point or two. So that's it. As far as a scalp, this is really a good example for a scalp too. You went long VWAP here, okay, and you see the trend line. I'm not to draw it. You can see it right here. What do we got here? 262. You got about a point, if I'm reading this correctly, 1.5 between here and here. So VWAP, sell. VWAP, sell. VWAP, sell. As soon as it broke out, then you got the previous day's close, you short. Cover into the 9, anticipate a short again, let it go. You could have covered half off and let the other half go down to VWAP. And then you could have taken it long and then rode it up again until the previous day close. And then next day happens, and then it just fades off, does it again, fails, the previous day close, just a beautiful fade. So it was a nice trade. So for my scalps, I usually always do a 3-to-1 risk reward ratio. If the risk reward is not there, I usually don't take the trade. So with scalps, they're usually bounce plays, which I don't really try to. I'm not a big fan of playing bounces. Okay, I like the points. When there's nothing else going on, I will look for the overextended chart that is far away from the 9 or the 20, and I will scalp looking for the pullback, the 30 to 80 cent scalp. I will look for that as long as it's within my risk. Can't talk today. My risk reward ratio. Okay, so when I scalp, it's counter trend. Okay, that's when I'll scalp. It's counter trend. Okay, like here, I could have scalped it here. Okay, so when the stock gets far away from a moving average, you have to anticipate a pullback. Okay, you have to, because stocks always need a pullback to remain healthy in an uptrend or in a downtrend. So this is one of my trades that still haunts me from the other day. This would have been about a 10-point trade for me with nice size. But again, you take the good with the bad, and there's always tomorrow. So this is how I manage this trade and how I mismanage this trade. One short was in the money, okay? Didn't take it. I was confident. Went against me, went to VWAP. So I added. I don't know if I doubled or tripled, but I added. And then 2 candles later, it broke VWAP and the 9. So I followed my rules and I tapped out. Okay? And then look what happens. Straight down. We'll say that's from 173, boom, to 165. I would call it a 7-point trade. But still, that would have been a nice chunk of change. Could have made my month on this one trade. In theory, I was right. Just purely executed. I should have given it a little bit more room because I knew that there was a sell-side bias on this stock. I just tapped out because of the size, once again, and followed my rules. What I should have done is got right back in and wrote it back down. So some trades work out, some trades don't. It's how you manage them that is going to give you longevity in this business. And I did. I followed my rules. I could have let it go another 50 cents, another dollar against me, but I just wasn't comfortable. The smart thing to do is tap out. The smarter thing to do would have been to get back in, which I didn't do. So I was too upset about missing this long or missing this short. So again, take the good with the bad, you move on, and you learn. All right? We never stop learning in this business. Once you stop learning, once you stop adapting, the market will take you out. Okay? And the market is constantly changing. So LBS, another member wants to know about adding on LBS. This one is not as smooth as Win, but you can see it held the 20 pretty much the whole way up, and then you had the 50 for additional. So looking at this stock, the way I look at it, having many years under my belt, knowing that this industry, this sector, I should say, was very strong, I was totally fine with the 50 all the way up. Okay? Just because you had MGM, you had LVS, you had Win, they were all running. So where do you add? The first add is right here. Okay, if you got long out of the gate, opening range breakout, we could have got long right here. Comes down, tests a 9 and holds, you get long. Okay, consolidates, comes down, breaks, reclaims it, you add. Okay, comes back up, you're still running. This candle right here takes out the high of that candle, you add. Okay, now I would get a little cautious. Why? Because you got the previous day close. So here, it came down, tested the 20, but it held. So if you're a super aggressive trader, you could add it here once again because it never broke the 20. Okay, and then take it out for this nice red to green move. And then here, you could have used the 50 as your stop, never broke the 50. I would have got stopped out of here, but I would have been fine if the trader said, hey, I used the 50, because it still held the 50, and then you got a double top, and then it started to fade. But every time it holds a 9 or the 20 on a pullback, that's when you look to add to a winning position. Okay? You don't add to a losing position unless that's part of the plan. Okay? That's how traders blow up, is by adding to losing positions. I don't want my traders, I don't want our group adding to losing positions unless you're at a level and you have the skill set and the capital to know how to manage your risk effectively. Because I do add to positions. Most of the time they work out, and sometimes I'll take a big hit. But the big hits I know how to come back from. Okay? And above all, I don't want you flipping sides. Okay? We are not ready for that yet. Okay? That's just like, okay, well, I'm going long. Long's not working. It must be a short. Let's just flip. That's garbage. That's not trading. Okay? We don't trade that way. That's not part of the plan. Does it work sometimes? Yes, it does. But I do not want you guys doing that yet. Okay? I want to make you guys consistently green and make you money day in and day out. And then we'll start tweaking our trading style and be more aggressive. Okay? So, some of the mods have different theories. I don't have to agree with them. The ones that I don't agree with, I will let you know I don't agree with, because I don't want you doing it. It's in your best interest to stay away from doing certain things at this juncture. A lot of you have emotional trading damage from other rooms, from blowing up. Some of you can't adhere to your stop losses. The last thing I want you guys to do is start getting the habit of flipping sides on a trade. That's just, okay, we're just flipping a coin. Don't do that ever. don't do that until we get to that level. Okay? And as far as, going into swing plays and holding core positions, for some of you, that's great. I have no problem talking about that with you and giving you my recommendations. I'd rather do it PM because I don't want to. I'm very cautious about calling out people in the room because a lot of it is personal business, and there's some ready for overnights, and there's some that aren't ready for overnights, and there are some that take overnights that I see no reason why they're taking them, but only thing I can do is give you my input. I can't control you guys pushing the buttons and executing the trades. It's just my job to guide you and to make sure that you are making the best decision for you. That is my job, is to point you in the right direction, make sure you're making the right decisions. To protect your capital, to make money, to clear the damage that's been done to you financially, and to put you back on track to being a successful, winning trader that knows it's a long journey that we have to stay on track. So we got a few more charts. This is once. Of course, here bottom ticket went short right here. Came up, wasn't concerned at all because I had all this congestion and consolidation right on the 50. So I tripled up my position right here, added more short, got the snap I wanted, covered, made a nice profit. This is a good trade to see why I added, because I had all this resistance and congestion right here. So if it popped over the 50, I would have cut it off. Not a big deal. Worked out, tripled up, boom. Got my fade, cover for a nice profit. Okay? Situations like this, I'm okay with the ads. Okay? Because I have all of this in my favor. A few more. Once I wanted to pull this daily up to you because a lot of you asked me why I go so far out in my charts. When this opened up, I missed this. I didn't check the daily. Opened up at 65. Big gap up. Look to the left. Where's the previous high? You can draw a trend line right through the 65s, guys. Look at this line. 65s. This was a short all day long. Look at the 5-minute chart. Nothing but down. So 13-point move I missed because I didn't look at the daily chart on a stock that was gapping up. If I saw this was gapping up to the 65s, I would have saw this stuff to the left. I would have saw this trend line, and I would have shorted it and just forgot about it and just let it fade all the way down. That's how simple trading can be. This one I put up because I thought it was kind of interesting. I haven't seen this pattern in a while. Come down, stair-stepping down, stair-stepping. Then we open up. But this I thought was cool. It's 50 on the outside, riding it down on the 50 MA on the outside. So I haven't seen that in a while. I just thought that was a pretty cool technical pattern that I just wanted to share. I thought that was pretty neat because it's usually on the inside. I never see, very rarely you'll see it fade on the outside. So that's it for the charts. We have some pretty good trades. Now I just want to talk a little bit about trading psychology and what it's going to take for you guys to get over some of the financial and emotional stress that's been put upon you by people that don't really have your best interests at heart. And this is not my material. I am reading this from a trading psychology course. I'm just going to highlight some of the important things, and then we will call it a webinar. So, It's called Renewing Hope and Skills for Success in Trading. And it says, there's someone in my head, but it's not me. And if you think, quick interjection, that this doesn't apply to you, you're wrong. Okay? Emotions are 80 to 90% of your trading and how you react. Okay? So if you find yourself making the same mistakes over and over and over, hitting a brick wall, it's an emotional issue that you have to come to terms with. It's not an execution issue. Okay? It's a mental roadblock. So it says there comes a time in a trader's evolution when they hit the wall. Gone are the dreams of success dancing in their head that lured them into trading. Face it, I mean, I'm not living here, but we all got into trading looking for the big bucks. That's all. That's why we all got into it in the beginning. Where once optimistic blue skies prevailed in the young trader's mind, now storm clouds appear on the horizon instead. Turning theory into performance has not worked. Initially believing that trading can be wrestled to the ground and subdued, he or she plunged into a multi-year learning curve under the assumption that he or she could learn to win in trading. Coming back to reality, the trader reevaluates his capital from a more grounded position. Sounds like step 2 in your trading evolution. More humbled now by his precarious situations, he has less cash. He's like, okay, what the hell? Things aren't working. What he concludes is the realization that he may not make it unless there are some significant changes sooner rather than later. This is the wall that practically all traders eventually must face, but resist until they are forced to acknowledge it. Okay? And that paragraph says it all. Okay? More humbled now by his precarious situation, what he concludes is the realization that he may not make it unless there are some significant changes sooner rather than later. And that's what I'm here trying to do. I'm trying to speed up your learning curve. I'm trying to make you change the way you were taught, wrongly taught, and make you see things in a different light. Okay? So this is the wall that practically all traders eventually must face, but resist to until they are forced to acknowledge it. The good thing about all of my traders, all of our traders, is that you all acknowledge that you want to get better and learn how to trade. That's why we're in Iconic, to get better. Okay? It's a no bullshit room. I am not here to build my subscriber base. I'm here to teach you guys how to trade and have fun and, to have people to talk to during the day. But more importantly, I like teaching what I do. So the game plan that you brought to trading is simply not working to produce consistent profitability, much less livable income that seemed so reachable in theory just a few short years ago. Does a trader just try harder? Does he or she simply decide to get out of trading and find another way of making easy money? Or does a trader acknowledge that he has to change to get past the impasse of the wall? This is the fork in the road that all traders are forced to deal with after the honeymoon is over. Okay? And I think a lot of you are there. And I think a lot of you are on your way to knock down this wall. Okay? Because I know a lot of you are busting your ass and doing the work and making the progress. There is a path that takes a trader beyond the wall. But no one wants to get there because it is unfamiliar and forces him to travel into the unknown. Somehow the mind that engages the uncertainty of the unknown has to change. I'm going to repeat that. Somehow the mind that engages the uncertainty of the unknown has to change. Biology and psychology has to be dragged into this new reality. Letting go of outcome and embracing uncertainty. Everything else has been tried already. And if the trader is going to succeed, this is the fork he or she must take. Okay? A couple more, but to me, this is gold. People starting out in trading really have no idea what awaits them in their evolution as a trader. And this is true. It usually takes 2 to 5 years for a trader to wake up from the pipe dream of diligent work leading to supposed attainable financial success in trading. In particular, they ignore the contribution of the inner game of trading as a component of success in trading. This is a tragic flaw that seems to simply be part of the journey of discovering in trading. And this is the last thing that a trader wants to examine. The need for personal development seems so obvious in retrospect, yet traders get so seduced by the blue sky promises of financial freedom in trading that they ignore this need for psychological education, at great peril to their future and their cash. Consequently, trader psychology and their beliefs about their capacity to manage the unknown when capital is at risk becomes their Achilles heel, constantly undermining their best efforts. And that puts it perfectly. Consequently, trader psychology and their beliefs about their capacity to manage the unknown when capital is at risk becomes their Achilles heel. When there is money on the line and you are not used to reacting, you do the wrong things. You have to get control of your emotions. Ultimately, all traders who create the conditions of success in trading discover that the head game is what has to be mastered rather than just knowledge. Applying knowledge in the face of uncertainty and letting go of the human need for control over outcome is the real mastery required for success in trading. It is a difference between theory and practice, of classroom knowledge and applied knowledge. That falls on deaf ears until the suffering caused by holding on to outdated assumption finally awaken the few that survive their initiation into trading. So on that note, that's enough for you to digest right now. And then I'll pick up some more on this trading psychology on the next webinar. But that being said, trading psychology and the emotional aspect of trading for most people is the problem. Okay? And it needs to be examined. You all know Mark Douglas, Trading in the Zone. I recommended it to a lot of my traders. It changed so many lives. Look at EC, Eric C. I mean, he's cranking. That book helped him tremendously because he realized that, okay, I know how to trade, but there's other issues that are in my way. Let's find out what these issues are. Let's kick him in the ass and let's start making money. And that's what I want you guys to do. Recognize where your problems are, face them, deal with them, conquer them, and let's get back to trading. That's it's simple as that. Simple as that. So that book is free. It's a PDF. You can download it. There are some other recommendations, but that's really probably one of the best. But if you have been in the room for a while and you're still having bumps and you understand my trading methods, but you still can't be consistent, there's a little bit of trading emotions that are holding you back. So I want you all to think about that, okay? Because you only make the mistake once. If you make it more than once, it's not a mistake anymore, okay? Every mistake you learn from, you try not to make it happen again, and it should just make you a better, stronger trader. So on that note, you guys have a great night. I'll get this out to you momentarily, and I'm going to get back on track and doing these on Sundays. So I still would love to do them live. It's just hard with everyone's schedule. So feel free to email me, call me, chart reviews. I'm here at your disposal. And let's kick some butt tomorrow. You guys have a great night.